Hello and welcome to the Pirls Stock Market Commentary. Market week ending Friday, December 13th, 2013. Market breadth. With this past week's market decline, our bull-bear point and figure ratio fell from 1.50 to 1.22, remaining in bullish territory. The total count of securities in bullish or bearish patterns decreased 2%. to 2,303. The count of bearish stocks increased 10%, while the count of stocks in bullish patterns decreased 10%. The Pirls P&F Market Breadth Summary Chart shows us a market now 14 consecutive weeks in bullish territory. Paid subscribers have access to the Excel data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking on Membership, and clicking Sign Up. A free 2-week trial subscription is available for those who are interested. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 148 points for the 13th decline in 20 weeks. At a positive 164.14 points, it has dropped below the November 2011 top and below all 8 other tops above plus 100 in the last 35 months. Market Gauge Volume Analysis. In this week's volume analysis, the Russell 2000 ended in neither accumulation nor distribution mode. In the last 2 weeks, it had 0 accumulation days and 4 distribution days. Of the other indexes, the S&P 500 deposit receipts ended in neither accumulation nor distribution mode, while the Diamonds Trust both ended in accumulation mode. Accumulation days are counted when the index closes up on higher volume than the prior day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Russell 2000 ended in neither accumulation nor distribution mode. Momentum. After last week's successful completion of a zero-line reject long trade, the CCI 20 daily has fallen within the plus or minus 50 range for another zero-line reject should the CCI 20 begin to climb again next week. In Woody's CCI trading system, 6 consecutive bars above or below 0 are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 43 weeks ago, while the daily CCI 20 began a Woody's uptrend 12 weeks ago. The CCI 20 weekly continues above plus 100 and remains outside the plus or minus 50 range for a valid zero-line reject entry signal. Industry rotation the last 2 weeks. All but one of the top 5 industries are positive, and all of the bottom 5 are negative. Bullish, computer hardware, and comp tech continue in the top 5. Networkers has entered the top 5. Oil services and oil remain in the bottom 5. Bearish, banks has entered the bottom 5. Gold and silver has left the bottom 5 and entered the top 5. Disk drives and semis have left the top 5. Focus this week. Here's some fresh thinking on a basic false premise of the usury that keeps us enslaved. Rationalizing Usury, the Time Value Hoax, from Anthony Migchels and his Real Currencies blog. Some key points from Migchels' article. The idea that the lender can't use money when he lends is the classical argument to rationalize usury. But the bank doesn't lend anything, it's all credit by bookkeeping. Another point, the time value of money is the notion that holding money today is worth more than tomorrow. Between today and tomorrow, there will be inflation and the missed opportunity of investing it. It is at the core of modern theory of finance. It is the rationale for usury. It can be heard each and every time when people defend it. It is the defining belief that creates acceptance for interest on loans of money. because usury is supposed to be the compensation for the lost time value to the lender. Another point, the fact that the time value idea still holds so much sway is quite astonishing after 12 years of truth movement and mass exposure of fractional reserve banking. Another point, even if money was printed debt-free, or if we use gold to back all the money, usury would still be both wrong and unnecessary. Because why do people save? To use it later. They don't want to use it now, otherwise they would not save. So they lose absolutely zero by not being able to use it now if they lend it out. Not using it now but later is the essence of saving. And if we are not going to use it now, why not let somebody else use it in the meantime? Another point, we are not told that paying compound interest to the rich is what is keeping us poor. No, morons like Peter Schiff now say we need to save more and we need incentives for that, higher interest rates. Another point, because the simple fact is, by saying, I wouldn't lend without interest, we relegate ourselves and our brethren to interest slavery. Because we don't lend, we borrow. By not lending to our brethren, they will not lend to us. We will have to go to the rich and to the banks. And since it is Christmas time, all of those points remind me a lot of George Bailey and his savings and loan in It's a Wonderful Life. So maybe you'll have an opportunity to enjoy that film and understand some of these principles through watching a story unfold. Thank you for tuning in for this week's Sand to Pirls Stock Market Commentary. Hoping that you're having a great weekend, that you have a blessed week coming up, and wishing you every success.